So good morning, everyone, and good afternoon for those of you on the East Coast and overseas. I'd like to thank you for joining our webinar, the SAP RAR 1.2, the latest in SAP RAR functionality. Today you will hear about all the new features that SAP has built into the latest release of SAP Revenue Accounting and Reporting 1.2, and you'll get a deeper dive on a few of the features our clients have been most interested in. We'll hear from SAP development about what these new features mean to customers and get a high-level glimpse of cost objects in a live SAP RAR 1.2 system from our own expert. As a reminder, this session is being recorded, so you'll be able to go on our website and get a recording of this later on. Wanted to remind you of a few housekeeping items. You can engage with us in many ways during the event. If you have a question, submit it in the GoToWebinar Q&A box, and we will answer those questions either real time or toward the end of the session. Again, the webinar is being recorded, so you will be able to get a copy of this and share it with your colleagues. There is a survey available at the end of the webinar. And we would love if you would fill that survey out. It will provide us feedback on how well we're doing, and will also help us set the tone for upcoming webinars. You can drop us an email afterwards, and you can engage with us throughout the session at our Twitter handle, at Bramisol. You can also use hashtag RevRecReady, and visit us at www.bramisol.com. I'd like to welcome today's speakers. Our moderator for today is John Froelich, VP of Strategic Accounts, and I'm excited to introduce our speakers. Our first speaker is Volkmar Zahn, a product expert, SAP LOB Finance. Volkmar is a member of the SAP development team in Waldorf, Germany. Volkmar is a product expert within the SAP LOB Finance. In his role, he is responsible for shaping and driving innovations for SAP Revenue Accounting and Reporting. Volkmar started his career at SAP in 1999. After being certified as an application consultant for SAP Financials, he worked in numerous projects implementing SAP's financials and controlling portfolio. After this, Volkmar worked in various roles as a product and solution manager in the area of tax and revenue management, as well as compliance. We're excited to have him here. Larry McKinney is my colleague here at Bramisol and is Vice President for Strategy. Larry has 20 years of experience with SAP products and solutions. He spent 5 years working for SAP, leading the technical arm of their retail practice. His work has been featured at SAP's TechEd conference, and he has been both a speaker and presenter at TechEd and Sapphire. He has worked in multiple industries, including aerospace and defense, telecom, retail, apparel and footwear, manufacturing, consumer products, public sector, pharmaceuticals, and healthcare. Welcome, Larry. I'd like to briefly cover our agenda for today. We will finish our introductions. We will then transition over to the new features of SAP RAR 1.2, led by Volkmar Zahn. And Volkmar will then walk us through a deeper dive on some of the key new features, including transition, cost recognition, cost object controlling, project systems integration. And then we will transition over to a high-level view of the system where Larry McKinney will provide us with a walkthrough of some scenarios in the 1.2 system. We'll then wrap up with Q&A and send you on your way. So thank you very much, everybody, for joining. I'd like to remind you quickly, for those of you who do attend regularly, that this call is hosted by Bramisol, the leader in revenue recognition. We have the experience, expertise, and processes and tools to help you get RevRec ready. We've helped many companies leverage the new SAP RAR system and help them comply with the upcoming ASC 606 and IFRS 15 revenue accounting standards. We have, again, the experience to help you get RevRec ready. I'd like to introduce Volkmar. Volkmar, thank you for joining us. I will now launch your presentation, and we can get started with an overview of the SAP Revenue Accounting 1.2 features.
Thank you very much, John. So thank you very much for having me here. And I would like to go today a little bit more into an overview about the features of SAP Revenue Accounting. And John, if you could please move forward to the next slide. So as you're probably all aware, SAP Revenue Accounting 1.2 was launched probably now a month ago. So the ramp-up start date was the 24th of May. And as you can see here on this slide, there's a number of functionalities which we have provided as part of that release. A lot of that based on feedback from our customers. So before we go into the deep dive, just let me highlight roughly what we have been focusing on in that release. As you're all aware, SAP Revenue Accounting is overseeing revenue accounting features integrating to a number of operational systems. And as part of that journey, we have been adding more operational components to the integration story. So here highlighted at the top, you can see the CRM service integration, where we are integrating into CRM service as well as the package quote and subsequent processes. Also, the area of cost object controlling is basically an integration area where we talk later on about the integration into results analysis. And at the bottom here on that slide, the integration to our high-volume billing component, hybris billing, which is especially used in the telco industry, but also in other areas. Nevertheless, there has been also quite an extensive focus on improving our capabilities within what we call the SAP Revenue Accounting Engine. So you will find improvements in contract management, just as an example. So for instance, how we deal with contract combinations. There were certain limitations in the earlier versions of the product in how you can merge certain operational contracts together into one revenue accounting contract. So we have been working on overcoming these limitations. Also in how we deal with work lists. So what we see very often within our customers is that you have, of course, your operational processes, but also quite an important role for the revenue account. So how the system deals with changes, for instance, to a sales order, that can be much better handled now as part of our work list handling. And also to highlight, there have been some major changes as part of contract changes, or what IFRS 15 refers to as contract modifications. So there have been a number of extensions and what rules are built into the system, how a user can potentially override if it's a prospective or retrospective change, if an operational contract will be changed, or how a user can see the revenue and the changes to the revenue. And also I would like to highlight some functionalities and how we distribute contract asset and contract liabilities. So there's a lot of discussions in how that needs to be handled. The standard is pretty clear on that matter. So basically, it requires a netting on a contract level. However, what we hear from a number of customers now is that we need to provide a better flexibility around this. So basically what the solution does is it calculates basically contract asset, contract liability on a performance obligation level. And for postings, usually that is then netted on contract asset, contract liability. However, if you have certain scenarios where you want to bring this down on a POB, on a performance obligation, for instance, to split it out into different profit centers, then within the 1.2 release, there's more flexibility provided, and we can see quite a lot of discussions around these features. Now, if we can move on to the next slide, please. Today, really would like to focus on three major topics. You can see here basically 4 headings, but I wanted to merge one of those items, the CO account assignments and the cost recognition, into one topic. So the first topic we will start into is the transition. And transition, again, we discussed with a lot of customers, also SAP internally, in what the best way is to go into a transition and how we do the migration scenarios. Migration itself is probably a topic in its own, and probably we should have another session on that matter in itself, but I would like to at least high level go into what transition features are provided and what also some of the, let's say, challenges and also the topics have been in discussions with our customers. Then around cost, the standard has its own paragraphs around how to deal with contract costs. So we will talk about what features are provided in the solution. And as I understood, Larry and John, you earlier, you're also going to present a little demo on that matter. And finally, we talk about cost object controlling. This is how we internally call this functionality, and this is also how you will find it in the online documentation, which is basically the integration into results analysis. Now, these will be the three topics, and let me start, please, with the last topic, because that is certainly something which has been heavily discussed in our customer base. So, transition. For the transition, next slide please, we are generally differentiating between the full and modified retrospective transition. So basically how many years you have to go backwards. So for the full retrospective, basically to report for a comparative time frame of 2 years or 1 year, depending on if you're listed on the SEC or a more European company, versus the modified retrospective method. And you can see here already on the slide that we also have to talk about a few constraints. I will highlight this later on. So as part of the discussions we have been having with our customers, there has been a lot of discussions around how to best deal with which approach, and we want to talk about this a little bit later. So what is part of this transition functionality? It's a new functionality as part of the Revenue Accounting 1.2 release, and it comes with different use cases. And probably the most applicable one for our customers is basically where a customer migrates, for instance, from SD, but also from other operational systems into the old or the current standard, as well as the new standard. So basically what our solution, SAP Revenue Accounting, provides already with earlier releases is migration capabilities. We call this operational and initial load, which allows you to migrate operational data from SD, but potentially also from other systems, into the revenue accounting engine. So basically, we would set up a revenue accounting contract in the current standard, as well as in the new IFRS 15 standard. And that is one use case, and we assume that this is also the use case which is most applicable to our customers. Now, there's also a set of customers, and probably SAP is one included here, which are already live and productive with our revenue accounting engine, potentially under the current IFRS standard. And in this case, basically, the solution also provides another feature. We call this here, create a new accounting principle as a copy. So imagining that you're already productive with revenue accounting under the current standard, you have a number of events, SD orders, fulfillments, invoices being processed. Basically what you can do is you can transfer these, what we call revenue accounting items, into the new standard. So what's happening as part of this exercise? Either through the migration processes or through the transfer program, what you usually do is you generate new revenue accounting contracts according to the new standard. So this may be another performance obligation being added. Yeah, so for instance, you have now an option, a material right, you wish to add to this new contract, or maybe a new warranty which needs to be added, then this is part of either the copy program or the migration activities. Or you may say the fulfillment type needs to be changed. Maybe you have been recognizing revenue over time, and now for a certain performance obligation you wish to change that. For instance, you wish to recognize revenue at least for this performance obligation upfront. So this is usually part of the processes, as part of the copying, as part of the migration processes. Now, there is an additional step, and we call this here the calculation of the cumulative catch-up, as also the standard refers to. And what this process, and its own program within the SAP Revenue Accounting Engine, what this program basically does is it looks at all these contracts under the new standard and reallocates the value. So for instance, if you now have a new contract under the new standard with now 2 or 3 POBs with different SSPs, maybe with different fulfillment types, basically what this job basically does is it looks at these contracts and reallocates basically the prices according to the rules. So that is a dedicated program, and if you look at some of the documentation which is out there, so for instance if you go to the SAP Service Marketplace, you will find also a few examples which probably outline and explain this in a much better way than I can do here on this short call. Now, in addition to that, we understood that there is quite a big need around a comparison reporting. Comparison reporting between the accounting principles, and we usually differentiate between the old and the new standard, or technically in the system you will find the source accounting principle, which is the current standard, as well as the target accounting principle. We do make use of the existing features within SAP. So basically, customers can choose between a ledger-based and an account-based approach to do the parallel accounting requirements. And also, it's quite important to outline here that there's also kind of a mixture. So we hear from some customers that they are a little bit scared of introducing a completely new ledger just for this purpose. So what we see in the market is that some customers understand the benefits of continuing with an existing ledger and adding additional accounts just to come up with the parallel accounting requirements. So with that, maybe let's have a quick look at some of the functionalities. And again, if you're part of the ramp-up program for Revenue Accounting 1.2, you will find basically a demo. It's a 10-minute demo, so we did not have enough time for today's call to do that. But on the ramp-up material, you will find a little demo which basically runs you through a set of 4 contracts in how that walks through the different steps as part of the transition process. So on the next slide, basically you see some screenshots which I was referring to earlier. So the comparison or the comparative report is a report which you can run and which provides you basically with comparative figures between the target, so target accounting principle, the current standard, as well as the source accounting principle. And I'm not sure if that is too much of an eye tester, but here we can see basically a summarized view broken down into basically what we call our posting categories. So you would see the recognized revenue, you would see the contract asset position, the contract liability position, and it also provides you with a detailed view on the right-hand side, a detailed view which compares the 2 accounting principles based on contracts and performance obligations. So we could, for instance, say that a contract under the current standard would have had maybe just 1 POB, and under another standard it would have maybe some additional performance obligations to fulfill the policies. These reports can be enhanced, so for instance some customers would like to do some reconciliation based on the region, but the standard out-of-the-box functionality would basically provide you with a comparison based on the accounting principle, as a functionality, as a feature we use within revenue accounting, and the company code, so a combination accounting principle company code, and allow you to drill down then into this either in a summarized way or based on a detailed view comparing contracts between source accounting principle and target accounting principle. Now, on the next slide, I would quickly talk a little bit about some of the challenges we hear from our customers. And the first one is obviously around the migration itself. Again, what I would like to highlight here is that there is quite some extensive guide out there on the SAP Service Marketplace around migration. First of all, it's important for me to highlight that the migration process itself, first of all, means that we load the data of the existing open contracts to the new system. Yeah, and we do this at a certain transfer date. That's the whole functionality around migration. So I'm pointing this out in comparison to basically what we find later on as the transition features, which then translates these existing contracts and the data from these existing contracts into then the new standard. What we do here, at SAP is we differentiate between the operational load and the initial load. So the operational load, more a technical tool, which creates the revenue accounting item. So I'm not sure how much you're familiar with all the details, but between the operational systems like an SD or a CRM, we have, let's say, a middle layer, the revenue accounting items, which build the interface into our revenue accounting engine. And this operational load, which is a feature provided, for instance, for the SD component, this operational load produces these revenue accounting items, which are then later on processed. So another big question is then usually which method to choose for. So either the full retrospective or the modified retrospective method. So most customers currently in ramp-up, as far as I remember our ramp-up survey, are currently going for a modified retrospective method. There is some, let's say, variation to this model. So for instance, some customers have chosen a modified retrospective with some pro forma reporting comparative time frame. So basically the go live with revenue accounting would be the 1st of January 2017, basically providing and producing some comparative numbers, which however are not necessarily audited, but at least giving some indications and can be used then also for operational management internally, and then doing the real transfer on the 1st of January 2018. So we see this as a kind of a third way in the market at the moment, where customers choose for the modified retrospective method with a pro forma reporting already 1 year earlier. So the full retrospective and the modified retrospective is certainly one of the biggest discussions we have currently. Now, the biggest issue which comes from the full retrospective method, that usually that would require that a customer should have already started the 1st of January 2016 with the transfer. And obviously that represents a challenge for many customers. So what we hear from customers is that they plan to, for instance, go live at the 1st of January 2017 and would then obviously want to do also a migration at that certain date. Now that in the context of full retrospective method and SD revenue recognition, so some of the customers are using that functionality, represents a challenge, and we would see that as an issue. And if one of those customers, would be good to get back to SAP and to discuss if there are certain options around this. So full retrospective method, SD revenue recognition, imposes some challenges and some constraints I also was referring to on the overview slide. If you are, let's say, just using the SD capabilities, not with SD revenue recognition, then for a full retrospective method, usually that would mean that you would do a migration at a transfer date 1st of January 2016. Now, one of the challenges we see in addition to that is that when you do a migration, then usually this is a migration at a point in time. So just to give you an example, imagining you have an SD order, you have a number of fulfillments, you have a number of invoices with a certain amount, then usually the standard migration tools do a migration, do an operational and initial load based on how the SD order was at this certain transfer date. And this is a standard functionality being provided as part of the revenue accounting engine. Now, that may be sufficient for a number of customers. However, other customers may say, actually, we need to track all the single change events. Yeah. Again, this is a discussion we're having currently with our customers. Now, the release is only out for a month. So I expect that there will be more discussions around this and how this could be potentially handled. Other let's say, discussion points, and Larry and John asked me to talk about this a little bit more, are basically around what is an open, what is a completed contract. Now, this may again be based on certain policies in your organization. The solution, revenue accounting, in standard, first of all, considers every contract, so basically also the complete contracts. However, there are certain user exits, so certain ways to enhance the solution, also to treat certain contracts as a completed contract and take them out of the migration capabilities. Other activities or other discussion points were, for instance, around how you deal with manual allocations. I mentioned this earlier that as part of the Revenue Accounting 1.2 release, also a big focus has been on the role of the revenue accountant. Yeah, so the revenue accountant looking at the contract, potentially looking at how the allocation have been performed, potentially doing manual spreading as referring to our solution here. And obviously, one of the questions is now, if we migrate our contracts and if we have a contract combination, so imagining we have a number of contracts from an operational side, we now merge them because of going to the new standard. What happens to these manual allocations? And again, this has been quite a big discussion with a number of customers, and the solution provides you with some capabilities. So worst case, as not always an automatic resolution is possible. In the case of a contract combination, this contract may end up in a work list. Other discussions were around how to deal with the practical expedience. I just made one comment in here. So which date should be considered? How do you deal with satisfied and unsatisfied POBs? Again, this is referring back to some of the comments I made earlier around what change events can be tracked. Again, transition is quite a heavily discussed topic within product management, within development as well. So we have been shipping, of course, the first iteration of this functionality, but we expect that we receive more feedback once customers start implementing. With that, I would like to close this topic and move on to the next area, which is around cost recognition. Again, this has been quite a big topic, and initially we, as part of the 1.0 and the 1.1 release, we have, of course, been providing an integration into COPA, profitability analysis, but have been focusing only on, let's say, a subset of account assignment elements. Now, the standard is, let's say, pretty clear in how to deal with contract costs. So I just put in a reference here to some of the paragraphs. So we talk here about the acquisition costs, we talk about fulfillment costs, and also in how these costs can be amortized over a certain period in time. So the biggest feedback here in this case certainly came from the telco industry. So in the telco industry scenarios, we talk a lot about commission costs and how they can be handled. Different scenarios. Some customers also decided to already build the cost component into a 1.1 release by using just the standard features of our contract revenue accounting engine. So, for instance, creating a contract just dealing with cost as part of negative revenues, and then using our account determination within the revenue accounting engine to determine the right GL accounts, in this case for the cost. Now, with the 1.2 release, we spent quite a lot of effort to enhancing this solution. And on the next slide, I would like to talk a little bit about this. So if you can move on to the next slide, you can see some of the features which have been provided. So the first discussion point, and I put this already onto the overview slide, the first discussion point certainly needs to be about what additional CO account assignments can be used. So with the 1.2 release, we now have the option to have internal orders. We can use sales orders, especially for the make-to-order processes. We can use WBS elements as well as a cost center. And usually, this is provided through the center component. What that means is, for instance, as part of the SD integration, then you have, for instance, SD order, and as part of the SD order, you would have a dedicated condition for cost, representing then the reference to the CO account assignments, and revenue and costs would then be updated on the corresponding cost assignments. So that's part of the general structure. So in other words, we are following the concepts and the design ideas we had already introduced in earlier releases, which is we leave the operational processes as they are, such as the SD component. However, we pick up certain events, for instance, a fulfillment, an invoice, and then just interpret them in terms of the revenue, or as part of the revenue accounting engine, and how to post into FI as well as to COPA. So that's part of some of the general design concepts, and also for the cost, we follow that idea. What does that mean for cost? So certainly for cost, we had to adhere to the matching principle. So basically, cost and revenues, and I think this is also mentioned in the standard itself, need to be recognized at the same time. So what that means is that usually as part of the sales order, we would have a posting, and you can see this here on the slide. We would have a posting cost of sales against material. That's a standard FI process triggered, for instance, from the SD component. Then what we do in revenue accounting is that we, similar to the revenue postings, we defer this cost. So again, there's a dedicated account determination provided within the solution, and with the fulfillment event, then we would realize the cost, again similar to how we do this for the revenue part of the engine. The way cost is realized could be multiple ways. So one could be that we realize the cost, then recognize the cost immediately. However, for instance, if you look at a commission model, you could also recognize the cost over time. Yeah, so for instance, if you have now a new contract being signed up, and this contract is over 2 years with a cost of 120, you could recognize then cost with a specific deferral method every month, $5 for instance, and then recognize the cost then over the period of 2 years. And the time frame in this case then could be determined. In this case, we're using a user exit, or more precisely, we use a body which helps us to determine what way should be used. In general, that follows the concept we can also find in the engine around revenue. However, what we are now able to do is to not only have its own account determination, but also reflect this cost on the revenue schedule. And there's now different models out there we have been discussing with our customers. Again, I mentioned one model already earlier where you have a dedicated contract just dealing with cost. That's part of a, let's say, portfolio contract, you could call it like that, versus potentially a contract where on each POB then there is a dedicated condition being provided representing this cost. So again, if you look at the provided material out there, you will find there's different models in how customers can utilize this feature. Now, I've made quite a big reference to SD. Of course, especially when we talk to our telecommunications community, we're feeding these costs conditions other external billing system or from external commission system, and the functionality will work the same way in this area. Now with that, I would like to close the topic around cost recognition. Again, has been quite a major topic of development for us. I'd like to move over to a topic which is quite related, that we call this cost object control. And basically for cost object controlling, we would talk about an area in cost accounting that assigns the cost incurred in the production of a company. Yeah. So what could that be? Here in this case, we are specifically in discussion with manufacturing customers, big manufacturing customers which that have big projects, high value projects. Not that many projects potentially, but every project or every scenario with a project potentially going into the millions and over potentially also a very long time frame. And in the past, that used to be worked in the results analysis and cost object controlling component. You could also see similar scenarios in the professional services area. So for instance, in the high-tech areas, in the software industry, now with the requirement to bring components of a customer contract together, obviously leading to the need that we also provide a holistic contract where you have, for instance, software component sales as well as potentially a consulting product. And again, here you can see the benefits in bringing together results analysis or cost object controlling with our revenue accounting engine. Now, how does that work? It's represented here on the slide set. Basically, you have certain cost objects where you collect the costs, and that again is a reference to what I said earlier. So for instance, you have a WBS element, you have a sales order, you have an internal order where you collect this cost. And now, on this picture, you will see already two scenarios, two what we call methods here in how we deal with the integration into our revenue accounting engine. One is called the percentage of completion method, where basically a POC is transferred from results analysis into our revenue accounting engine. Yeah, so that's an optional component, as you can see already here. And then the common process is to then transfer revenues from the revenue accounting engine back into the results analysis component. Which is the common process. So basically two methods. The POC method would transfer the POC into revenue accounting and backwards then the revenues into results analysis, or an alternative way is that you deal with the POC in revenue accounting itself, not from results analysis component, and just transfer back the revenues into the results analysis component. Now, how that works is basically that we then would basically let the revenue being posted through the revenue accounting engine versus the settlement process as part of CO or as part of the results analysis bring back the costs and revenues to profitability analysis and the cost itself to the FI component. So there's a dedicated flow, a dedicated process in how the system kind of provides the values into both, into FI and into the profitability analysis component. We do support, and you can see this here on the slide, the operational load and also the transition. Again, there's quite a lot of material out there which we would encourage you to read if you're concerned about this area, and where then also some of the specifics are provided. What are these specifics? I would like to make two highlights. One is that obviously this development was not only related to revenue accounting. So actually within results analysis we had to do quite some extensive enhancements. And these enhancements are provided through a specific node, or alternatively, of course, you could apply the corresponding support package, so both is possible. Secondly, there are certain, let's say, constraints or certain requirements to adhere to. One is in how basically the revenue is taken from. So which CO versions are considered. For that again, there is some additional functionality which can be either switched on through a business function or if the process is sufficient, you can also stick to the existing functionality. What we see on the next slide, and I think also in the demo in a few minutes, and then also I would conclude with my presentation. Basically what you see here is the process where within a results analysis the POC is calculated, and the screen is again quite slow, at least here for me. You would see that within the results analysis for a certain project, for a certain WBS element, POC of 25% is calculated, and with saving this percentage, this POC is then transferred into our revenue accounting component. So if you're familiar with the screens, you can see here on the right-hand side a revenue accounting contract, and as a result of that, the 25% are considered, and the revenue is realized then based on that percentage rate, and through the revenue accounting posting run, then also updated in FI. With that, I would like to conclude with my presentation. Again, the focus was, first of all, on an overview, but then 3 highlights, obviously, depending on which industry or what, let's say, customer requirements you have at the moment. There's maybe more focus on one or the other area. If you have questions, please feel free to reach out to us or to the colleagues here from Bramisol on the call, which will now also look a little bit more into that functionality around cost and cost object controlling.
Thank you, Volkmar. That was fantastic and very insightful. I appreciate you calling in and walking us through that. Next, we'll hear from Larry McKinney, our Vice President of Strategy. Larry is going to walk us through a couple of demos in the system. So that you can see exactly how it works within the system. So Larry, I have changed you to presenter, so it's all yours.
Thanks, John. Hopefully everyone can see my screen. We're going to walk through, I'd like to walk you through 2 different scenarios. The first one is a typical scenario where we have a set of hardware and some handsets. So, for example, a PBX or a phone system. You've got the hardware associated with it and then a bunch of handsets, and we're going to actually see the revenue and the cost being posted in the system. To do this, I'm going to start by creating a sales order, and then I'm going to transfer that to revenue accounting. We'll be able to look at it there, create the delivery, and do the post-goods issue for the hardware and the handsets, transfer that to revenue accounting, and we can see the changes that are made. And then actually calculate in revenue accounting the GI postings that are going to go back to FICO. So let's actually go in the system and do that now. So this is a SAP system. It's got RAR installed on it, version 1.2. The first thing we want to do is actually create the sales order. We're going to put in just a dummy customer number, PO number, and then a couple materials. This one's hardware, and this one for the handsets. So this is our sales order. We're going to order 1 of the hardware and 10 of the handsets. Now, something interesting to notice before we save this is we have our price here, and then we also have our cost here of 100. So our BPRS is right there with 100. We could also, if we wanted to, add SSP here as a pricing condition and pull that over into revenue accounting as well. Or SSP can be calculated in decision tables, or we can have something like the last year's average. Whatever we want to do, we can do for SSP. So there's multiple ways to handle that. Let's go ahead and save our sales order. It has been saved. It's sales order 976. We're going to actually move that over to revenue accounting now. So this is going to create the RAI items that actually go over and create the contract and POBs within the revenue accounting module. So we're going to select both of these and click process. It tells us that they have been successfully processed and they are now over in revenue accounting. So let's go ahead and look at them. this is where we have to put in an operational document. In this case, it is a sales order, so we use the sales order number. We do a search for it, and we notice that we find 2 revenue accounting contracts. The reason we find 2 is because one of them is for the international standards, so the IFRS standards, and the other is for US GAAP. So you can have multiple accounting principles at the same time. You could also have a third if you want, or fourth, as many as you want. But really what you can do here is you can have the old US GAAP and new US GAAP at the same time. So let's go ahead and look at the revenue accounting contract. And in here we see our 2 performance obligations, one for hardware and one for the handset. And let's look at the revenue schedule that's created. Now in this revenue schedule, we have our performance obligations, and we see that there's the revenue that's going to be associated with them. And we see that right now it's unscheduled revenue, and none of it's been fulfilled. We can also see that we have unscheduled costs, and none of that's been fulfilled as well. So let's go back into the ECC system, and let's deliver the sales order. So it's 976. We're going to go ahead and go into it and deliver it. Now to do this, we're going to have to put in storage location. We're going to put in a picked quantity of 1 for the first item, 10 for the next. And because the first item is batch controlled, we'll put in a batch number. Okay. We're now going to post goods issue for this. And the delivery has been created and post goods issue has been done. So now we're going to move that post goods issue event over to revenue accounting. Now the reason we're doing this manually is because I wanted to show the individual steps. This can also be set up as a background job in the system or as an event that you can capture and have workflow automatically do it. There's lots of ways to process this. So we're going to select both of those items, go ahead and process them, and that will send them over to revenue accounting. So let's go back to revenue accounting and look at what's happened. This is our revenue accounting contract, and we can see that the unscheduled revenue is there. If we refresh, we can see now that the revenue has been recognized because the post goods issue event has happened. We can also see that the cost has been recognized as well. So the matching principle, both of those have been recognized at the same time. We're going to take a copy of the contract number here. Now, the status right now is it's recognized but not completely posted. What that means is it's recognized within the revenue accounting module, but it hasn't sent it back to do the GL postings within FI and CO. So we need to actually have that happen. So let's calculate those values. To do that, we're going to pull up, just to save time, it's the company code, and this is the US GAAP version. We'll put in the contract number, click transfer. Now this is creating a background job that's going to generate those accounting postings that are going to go back to the ECC. So now let's do the actual posting run that's going to create those documents. And again, we're going to select GAAP version, put in contract, and we're going to simulate. What this does is it shows us, before we actually do the posting and send it, what the postings will be. So we see the GL accounts that are going to be impacted and the amounts. And we can see that we have our cost of goods sold items getting hit. So that looks good. Let's go ahead and switch to posting mode and actually run the posting job. So another background job has been created. Let's go ahead and look at that background job to see what's happened. And it hasn't finished yet, so let's go ahead and refresh it. There, now it's completed. We can select that background job, look at the GL document, and actually go into it to see that it's been posted in the system. And here we can actually see the accounting entries that have been posted back in. So it's now gone from revenue accounting back into our traditional GL, so back into FI and CO. So that is the first example. For the second example, we actually have a WBS integration within RAR. So for this, we're going to create a sales order And then the sales order is going to have a WBS element assigned to it. From there, we're going to create the revenue accounting contract, and then we're going to look at results analysis being run for project systems. And that's going to give us a percent of completion of 25%, just as Volkmar was discussing in his presentation, and then we can actually see that flow through to revenue accounting. So this one is a recorded demo, so let's go ahead and take a look at it. The first thing we do is create our sales order. And again, we're putting in just a generic sold to party. We'll also put in a PO number, and then we'll come down and put in 2 material numbers. The first material number is going to be for a smartphone. And then we'll also have, you have to select the sales org stuff, and then a second material number that is insignificant for the purposes of this demo. But once that's entered, we're going to go to the Account Assignment tab, and this is where we're going to enter in the WBS element. So this is how it's going to link back to the WBS. Now we go ahead and save, and we've created our sales order. Now that the sales order is created, we're going to, and by the way, on this demo, in the background, the sales order has automatically been transferred to revenue accounting, so we don't need to do that step. We're going to go now into revenue accounting and look at that sales order that was created and automatically transferred in the background. And as we search for that sales order number, we see that we only have one entry that's returned. That's because in this system, only one accounting principle has been configured. In the other system, 2 accounting principles were configured, one for IFRS and the other for US GAAP. We're going to go into that document, and we're going to look at the revenue schedule. And here we're going to see that we have $21,500 unscheduled revenue, and we have 2 performance obligations, and this one is expected to have revenue of that amount, $12,285. The next step is we're going to go through and actually do results analysis for the WBS element. So we're logging in, we're doing the WBS element that was assigned on the account assignment of the sales order line, putting in the month, and this was last month it was created, 2016, and we're going to execute the results analysis run. And here we're going to see we have actual costs of $500. We have planned costs of $2,000. And then we have our percent of completion at 25%. So we save that. It's been saved, and it has automatically transferred to revenue accounting in the background. And now we're going to look at this contract by refreshing it and notice that it has now created the 25% fulfillment. And we can see that we have recognized revenue of 3,071 euros, which is roughly, it's exactly 25% of it. We can see that that posting has happened there. We go into the POB, and we can see that the cost object has come in. And we can see that this integration type is percent of completion based. So it's a percent of completion based integration. And lastly, we have the WBS element that has also come through. So it's tied all the way back. The last thing we're going to do is actually calculate the postings that are going to come back to the GL side. So this is in revenue accounting. We're going to create those entries. Transfer. That background job is started. And the next thing we're going to do is make sure that we do our posting run. And in this example, we're actually not going to simulate it. We're just going to go ahead and send it right through. We're going to posting mode, putting in the contract number, and then posting. So now it's done. We're going to go to the job monitor. It's still not ready, so let's refresh. The posting run's done. We'll select that particular posting run, look at the GL documents associated with it, and actually go into that document. Now in here, we're going to look at the first line to see if it's been passed over, and there we can see the WBS element has been passed over into the GL accounting document. And that is the end of this scenario. So at this time, I would like to transition back over to our monitor, John. So thank you very much, John.
Well, thank you, Larry. That was terrific. I appreciate that, and Volkmar as well. Thank you. You guys did a fantastic job. Hopefully everybody can see my screen. So I want to thank everybody for attending our webinar. I want to, in particular, thank Larry and Volkmar for all of their insights regarding the new SAP 1.2. As you know, this is being recorded, so you can download it. What you've seen here and heard today is the overview of the new features included in 1.2, and you've seen a deep dive into 3 of the most quote-unquote popular and important features. You learned how these features will benefit you, why you should care about them, and additionally, you saw that these functions actually work within the 1.2 system, and you've seen how easy it is to produce the results. I want to remind everybody that our next webinar is scheduled for July 28th, and will focus on the issues around data conversion and migration that Volkmar mentioned earlier, with potential discussions of how to move or migrate old RevRec data and what to do with things like in-flight contracts. Those are contracts that, when you make the transition, haven't completed their run. So look for this in our upcoming newsletter and our emails. As we approach the end of June 2016, I want to remind you that January 1st, the date for compliance, is only 18 months away. If you plan on doing at least 2 quarters of parallel reporting, you now have only 12 months to get your systems, processes, and people ready. At Bramisol, we're the experts in RevRec. Our SAP RAR cloud platform and radar methodologies can help you get started quickly on your journey to become compliant with the new ASC 606 and IFRS 15 standards. Our experts have experience across a number of different industries and have helped customers prepare their systems for compliance. As we wrap up our webinar, I only have one question for all of you from our clients that are attending. Will you be RevRec ready? Thank you, and have a great day.